The third annual South African Investment Conference to attract business to the country enters its second day in Sandton, Johannesburg today. It's going to focus on subjects like the energy plan, small business growth and infrastructure investments. Well, for more on this, I'm joined by Dr. Martyn Davies. He's Managing Director for Emerging Markets and Africa at Deloitte. Thank you so much for joining us, Dr. Davies. Now, of course, I don't know to what extent you're participating, but are you getting a sense that there's a lot of activity, a lot of interest in investing in South Africa?
Well, just what I'm picking up from a news number from yourself, your colleagues, and a few others, perhaps, it's not quite as doing these things virtually is never as good as doing things in person, I'm afraid.
Yes, no, that is quite problematic. But in terms of obviously the themes of the meeting, getting people to be interested in investing in South Africa, do you think we're going to gain much traction this year, particularly what with the COVID-19 pandemic? And of course, we do have a number of problems around our fiscal situation and so on and so forth. We have this big plan to invest in infrastructure, but there are big questions about where the money is going to come from. We will need the private sector to participate. Is there interest?
Look, your previous speaker being interviewed on the market said it perfectly, is that looking at sort of the sentiment around sort of a rand valuation, equities, and South Africa is certainly a price taker, and quoting him, he said there's not much going on locally. There should be. I think this is not so much an investment conference as it is in speaking to investors, but as it is should be utilized as an opportunity for the president and ministers to announce some deep structural reforms in the country. The growth forecast is set out by a finance minister a few weeks ago in the medium-term budget speech update was pretty bleak, to say the least, a 1.5 growth forecast of medium term of GDP growth. There's no reason, I often say, that South Africa, considering our state of development, our aspirations, the strength of our private sector in this country, there's no reason why we should not be growing at 4 to 5%, even during these challenging times, that is in this almost sort of, dare I use a phrase, post-COVID environment.
Yeah.
Infrastructure spend is about, the infrastructure story is a liberalization story. I do not want to see, as we have seen for many, many years, South African capital being invested into shopping malls in South Africa. It ain't a productive return. We want to see liberalization. We want to see the state not squeezing out private capital, and private capital not going to shopping malls, but going into productive assets. Think rail, think ports, think roads, think metro rail systems around cities. That's what we really need to see. This lazy capital investment, I'm afraid, into shopping malls and the like, and they've been caught out by COVID. I think this is a significant wasted opportunity. And we talk about infrastructures. How do we start to spend smartly on infrastructure, which will deliver real economic returns into the country?
Yeah, the things that you talk about marry very nicely with the president's recovery plan that he announced to us some weeks ago. But are you somewhat disheartened or not really sure about when we're going to begin to see implementation? Because we can have all these speeches and all these plans, but we need the implementation, of course.
But that's the key issue, is that we can South Africa's awash with plans and objectives and acronyms about what we need to do. We know that it's economic common sense. The challenges need to have good implementation, and I think we're one of the few countries in this part of the world which has great institutions. We have incredible human capital, but the value is really derived, as you allude to, is from joining the dots, and the joining the dots results in implementation. Is getting everyone on the same page, call it a social contract, but call it whatever you will. But ultimately, we want to see action here. But structural reform is around sort of marketizing state-owned companies, getting state-owned companies out of monopolistic practices, allow private capital to play. We're starting to see that come through in terms of the power sector. I mentioned rail, I mentioned ports. We see spectrum. Finally, we spoke about this years ago, spectrum being made available to telcos players to enable our TMT sector to be a tailwind to the economy from March next year. It should have happened March 3 years ago. So there needs to be, if anything, from COVID-19, there needs to be a heightened sense of urgency amongst all people in this country, because if we do not, I'm afraid, It's the poorer levels of society that suffer the most.
Even though South Africa and the rest of the continent wasn't as badly hit by the COVID-19 pandemic in terms of the health impacts, of course our economies have been hit even harder, and our ability to respond to the damage is that much more difficult. We don't have the luxury of being able to print money like the United States, for example. We do have at the beginning of 2021 the African Free Continental Trade Area opening up on the 1st of January. But given the fact that the continent will largely be on the back foot, and you've got countries like Ethiopia which were doing so well but have now had a setback, what do you think that having that free trade area open up on the 1st of January will mean?
Well, this is obviously a good sweeping long-term, not short-term, long-term impetus to growth in Africa. But for we as a national economy to hitch our growth model to a free trade agreement is far premature and wishful thinking, I would say. Over the short to medium term, there's significant hurdles to overcome, particularly infrastructural services processes, before we start to allow or liberalize the flows of capital, flows of people, most importantly, flows of goods and flows of services that the Continental Free Trade Agreement talks to. I go back to what I said at the beginning, is a country's economic destiny will be determined by its own policies and ability to implement those policies, not on a regional grand play, particularly a region that is so heterogeneous and so diverse and so geographically wide as Africa is. I'm very much a proponent of liberalized and free trade in our continent, don't get me wrong, but we cannot depend on that as a growth driver of South Africa in the short to medium term. I think 5 years.
Dr. Martyn Davies, always a pleasure talking to you. That was Dr. Martyn Davies. He's the head of emerging markets and Africa at Deloitte.